What is technical analysis? This technical analysis is a method of investing which focuses on the forecasting of future financial price movements, classically based on an examination of past price behavior. It is a study of prices with charts being the primary tool and is used to look for trends and patterns which may indicate future price movements. And this chart study enables us to understand human behavior and distinctive patterns emerge in charting which are used as tools to make decisions. Now, this technical analysis does not pay attention to the fundamentals. However, some traders use the technical or fundamental analysis exclusively, while others use both types to make trading decisions. So, what's the philosophy or rationale behind? Now, let's understand. Market action discounts everything. This technical analysis assumes that at any given time, price reflects everything that affects it. All relevant information is already reflected by prices. Now, these technicians believe that the relevant fundamentals attached to that financial market segment, along with broader economic factors and market psychology, are all factored into the stock, and that removes the need to actually consider these factors separately. And the residual left is analysis of price movement. Next is history repeats itself. What we are talking about here is price movement history. The repetitive nature of price movements is attributed to market psychology. This technical analysis uses chart patterns to analyze market movements and understand trends. The participants tend to provide more or less same reaction to similar market condition over time. So charts reveal patterns in price movements that often repeat themselves, and price patterns repeat due to recurrence of investors' behavior. And lastly, prices move in trends. It has been observed that price movements follow trends. After a trend has been established, the future price movement is likely to be in the same direction as the trend than to be against it, obviously until the same reverses. And this price movement can be either uptrending, downtrending, or remain flat. Now, what a chart is or what it does. So this chart is a pictorial representation of demand and supply. If there are more buyers than sellers, the price will go up. If there are more sellers than buyers, the price will go down. Now, the subject, technical analysis, employs technical tools to spot and even predict changes in direction of price trends. These charts are objective and they, without a doubt, speak to you. So you must understand their language. They definitely do not lie. And chart reading, on the other hand, is subjective and may lead to inadvertent or incorrect forecasts due to human error in judgment. Now, this technical analysis is all about being disciplined at the time of trading, which is required in trading a strategy, handling psychological issues, and money management. And yes, the percentage composition that you see is all true, even more than cent%. Trading a strategy is just a small part of entire game plan. We are going to cover all gradually. Now, I really don't desire to see any of you burning your hands unnecessarily. A trading strategy is completely different from trading a strategy. Now, knowing a trading strategy is important, but definitely is not going to make, your trading experience profitable. It's dealing with the other two that can actually make you taste real success. Okay, so which markets this subject can be applied? This technical analysis is applicable to any tradable instrument or market where the force of demand and supply is a pricing mechanism. And accordingly, the subject can be applied and put to use effectively, whether be it currencies, commodities, bonds, stocks, and indices.